Hi everyone, in this quick analysis I will take a look at copper because it is behaving in a really intriguing way, and that might have consequences also for other markets, other commodities like oil, but also currencies. Before I go on, I have to remind you that this video is not investment advice. And if I'm gonna speak about specific financial instruments like futures, spreads, options, ETFs, currencies, and others, it is always just for educational purposes. Commodities keep rallying, and all of you are probably asking if this is the continuation of the bull market that started in 2020 in commodities, or just an aberration, and the declining inflation this year will eventually lead to a deflationary shock that would crush commodities. It turns out that copper market can help us answer this question. So I have prepared a few charts for today's video, and I will start with the first one, which is simply comparison between the price of copper and crude oil. These are continuous contracts, by the way. And crude oil is, without any doubt, the most important commodity. It's the largest commodity market worldwide. And I personally consider copper to be the second most important because it's the largest industrial metal market. And it is no surprise that these two commodities usually make the greatest weights in most commodity indices. And while their prices can deviate in the short term, it is very unlikely they would move in the opposite direction in the long term. And why is that? Well, when you have a commodity bull market or bear market, but let's consider bull market for now, you need a clear and long-lasting fundamental catalyst in the real world, in the real economy. For example, in the first decade of this century, it was the rise of China that triggered commodity bull market. So when you have such a bull market, it's simply impossible for such an important market as copper to lag behind. Yes, it is possible for some small niche commodity like some, I don't know, soft commodity or some niche agricultural market or some very tiny market like palladium to behave differently, but not for copper, because copper, as I said, is the most important industrial metal, and all the bull markets, all the commodity bull markets were fueled by real demand from the industry, from real world economy. And this chart is actually the proof, because you can clearly notice the tight correlation between oil and copper on longer time frames. But let's get back to last 5 years, because I wanted to point out one interesting fact, and that is that especially during the major turnarounds, copper actually led crude oil. For example, here in the major low in 2020, copper was already strong. It was making higher lows, while oil actually made a lower low in autumn of 2020. So that was interesting, but it was not the only instance. Another one was the top here in 2022, when copper was already moving down. It was making lower highs, while crude oil was still strong. And even later, near the end of 2022, copper was first to bottom and enter this consolidation phase, while crude oil was still bottoming out. So, given this fact, let's zoom in to the last year, and you can notice the same phenomenon, because copper was actually first to bottom out and start climbing here in spring this year, while the crude oil was still moving sideways and only caught up a few months later. So we can consider this bull run to be just a catch up with copper. I'm not saying it always works this way, and I'm also not talking about some more distant past. So I'm really talking about the current situation or the last 5 years. So I do not want to make any fundamental conclusions from this. But it is certainly an interesting detail, and this is also the reason why copper is really important to watch in the current situation, because it is at a junction where it looks like to be trying to break above and move well above $4, because it is making higher lows. There is a clear resistance close to $4, and the higher lows imply that it is more likely to break out and move higher, which would be the confirmation for other commodities like oil, and the scenario with the resumption of the bull market will definitely become more plausible. But the situation is not as simple, because the technical analysis is the only study that's actually supportive for copper right now. So let's move to these three charts, where we will delve into market structure for copper, the sentiment, respectively the positioning, and finally an interesting intermarket indicator. So let's start with the market structure, and you can clearly notice the divergence between the bull spreads on copper and the underlying itself across the term structure. So the divergence is so large that it is probably meaningful. But on the other hand, we are approaching definitely a resolution of this divergence, because despite its importance, there is still a chance that this divergence would close up by the spreads catching up with the underlying. It is less likely, but it can always happen. And you can notice that the spreads are actually consolidating, the volatility is contracting, no matter at which combination we look. So I think it is very likely we will get a resolution of this divergence soon. And while anything is possible, the spreads are more sensitive to the actual situation in the physical market. So that's why it's often the price that plays catch up with the spreads and not the vice versa. But as I said, we have to wait for the resolution, and it's likely coming soon. And let's move to the next chart, which is the positioning in the copper market. So here we go. The second charts are net positions, while the third, the bottom chart, is the net traders indicator. The copper market was quite oversold just this spring, but that's no longer the case. The positioning has become rather neutral or even slightly bearish for copper. Maybe I will close the net positions and focus just on the net traders as an indicator of the sentiment, and preferably the money managers. And you can see that whenever this indicator turned negative, it was usually a good time to buy copper, because a rally followed in most cases, like in 2020, of course, but also in autumn of 2022 and this spring in 2023. But like I said, that's no longer the case because there was a sharp increase in net traders. Basically, the money managers piled into copper, and it has become slightly overbought considering this indicator. In other words, there is still more room for upside, but if we really break above $4, then the copper market would most likely become really overbought. So any break below $4 would be probably unsustainable in the short term. And let's finally move to the final indicator, which is the copper-gold ratio. And it paints a similar picture as the spreads, which is not really favorable for copper. You can see that the indicator is clearly trending downwards. It is making lower lows and lower highs. And I have identified the next important level, which is at 0.20. And please remember that the ratio is multiplied by 100 so that the values are more readable. And also, don't forget that this is not a clear boundary. This is a ratio, so think about it as rather as an area where the price can turn around, or if it breaks sustainably above it, that may be the confirmation that the bottom for commodities is in. But for now, this cyclically sensitive ratio is still in a clear downtrend. It looks much worse than the copper price itself. So we can clearly state that the market internals for copper are not good. They are actually bearish. And this is why the price action itself, the price action on the copper itself might be a bit deceiving. So the conclusion is that, as I said, it is very unlikely that there can be any bull market, broad bull market and long durable bull market in commodities without copper participating. And while the price action on copper itself looks encouraging, the internals are very weak. So I will keep watching these indicators, and I recommend you to do the same. And I cannot rule out, and I do not rule out a break above $4 because it can still happen. But even if it happens, I would be very carefully watching these market internals, and if they disagree with the price of copper even after it breaks above $4, in case such a breakout happens, then that would be a really great opportunity to fade this, to fade commodities, fade copper, fade crude oil, and everything associated with commodities and cyclical plays. Before I finish this video, I have one bonus opportunity I want to show you today, and it is in the currency markets. Let's start with the dollar index, because this is something we already pointed out on Twitter. So if you follow us there, you are probably aware of this interesting fact. But for the rest of you, it is really interesting that while the dollar bounced like we expected, like we told you in our Substack, I guess a week or 2 weeks ago, I'm not sure, it is surprising that the positioning actually did not reflect this bounce. So the price went up, but the net positions of the large speculators actually went down, and even the number of large speculators who are net short increased. And that's quite atypical behavior, so that's not normal. I interpret this in a way that the large speculators are skeptical of a rally on the dollar, and they have a strong conviction that dollar will move even lower. Whether you agree with them or not is up to you. But personally, I'm inclined to fade them and give the rally the benefit of the doubt. And it's not just about my opinion, but as I stated, I'm long dollar through ETF on T-bills, and I have a large position on this ETF, and I continue to hold this position because I still think it is a good position. But keep in mind, my situation is unique. I'm from Europe, so being long dollar is something different than, I don't know, buying T-bills for Americans. And as we said many times, we do not recommend anything to anybody because everyone is different and have different risk tolerance and trading style and so on. But let's move to the final chart, which is the actual opportunity I see in the markets right now, and it's the Canadian dollar. The Canadian dollar became incredibly oversold in March, which was reflected in the positioning, and not just the net positions, but in the net traders indicator even more. You can see, especially when we look at large speculators, how low the net traders indicator actually dropped. So that was, of course, unsustainable, and it is no surprise that a rally followed. But the truth is, the turnaround in both price and net positioning was really strong and quick. And right now, the situation is actually the opposite, because there is now more large speculators who are net long the Canadian dollar compared to the number of large speculators who are net short. So I will go even as far as to consider the market to be slightly overbought. And once again, I think it might be an interesting idea to fade the large speculators and basically speculate the other way. It is definitely a risky proposition because we can consider it to be a counter trend opportunity, especially when we consider the short-term trend, which means that I would basically speculate that the value of Canadian dollar would decline compared to the US dollar, that the Canadian dollar would sell off. And the reason why I like this opportunity right now is because of an interesting setup, because we can clearly mark this range, this consolidation, as a risk-reward channel, or basically the risk-reward is really appealing because I want the price of this Canadian dollar futures to break lower, and I would not risk much, because if it breaks higher, breaks above this range, then it would clearly invalidate the opportunity. So the risk-reward is pretty good. And once again, if we consider the positioning on the broad dollar itself, this fits perfectly my short-term outlook. And there is no doubt that any sell-off in Canadian dollar would be very surprising, because Many market participants went long the Canadian dollar after the breakout from the previous trading range, basically connecting the previous highs. And this is not just my opinion, because you can see the proof below. You can see how many large speculators piled into the Canadian dollar. So this would be a perfect storm to fade them. But once again, it is quite risky, and I personally prefer to be just long the US dollar through T-bills. And maybe I will even increase my long position in the dollar in the upcoming week. I don't know. It will depend on the price action and the other data. But once again, my position is already quite big, so I do not have to increase it further. But, well, I will see. And I think that's all for today. That's all I wanted to show you. So you have a good reason to follow copper very closely, because it will be probably a good indicator for broad commodities. And there is also one interesting opportunity in Canadian dollar that might be worth your attention. So thank you for watching us, and see you next time.